Yes, so over the past month, a number of companies providing insurance to those affected by the LA wildfires have been reporting what they've taken on as massive claims. According to my tally, European insurance companies, and these are mostly providing reinsurance to insurance companies in California, have reported collectively $3.5 billion in losses. Now, that's significantly more than what was previously expected. Now, if you take a look at some of the large companies on my list, Munich Re, the biggest reinsurer in Europe, $1.2 billion loss from the LA wildfires. Hanover Re, for example, more than $700 million. Swiss Re and Zurich Re together, $800 million. Hiscox, one of the largest insurance companies in the UK, $117 million loss. Now, the upper estimate in the immediate aftermath of the wildfire was between $1 to $1.5 billion. Now, this total tally, according to my research, is double that amount. And analysts that I've spoken to basically say it's because the wildfires were not contained quick enough. The expensive properties in California that was already well known and accounted for. It's just how far and wide the wildfires have spread out.
That's a great point, because it does feel as though we're talking about top scale property here, very expensive fit outs, expensive cars as well. And then this went on for quite a while in terms of the lack of containment. When it comes to the ramifications here, we know that these events from the insurance industry tend to have some sort of fallout where prices get impacted at some point. What are you seeing on that side?
So, yes, one might instinctively expect premiums to go up, but what's happened is because of the profitability of these insurance companies, premiums have actually been declining over the past year. Now, if you take Munich Re, for example, they paid out $43 billion in claims last year. So this $1.2 billion hit is kind of small compared to the company's overall finances, but they took in 60 billion euros in revenues in premiums, right? So that's 5.6 billion in profit is what they've reported. Now, if you look at the other companies in the sector as well, they've reported very similar profit margins. What that's led to is increased competition amongst companies providing insurance contracts to California, for example, and that's meant premiums have just generally been declining over the past year or so. What the LA wildfires have done is perhaps slowed down the rate of decline in premiums in California.